this is why I love stock buybacks. What is a stock buyback? A buyback is basically when the company is coming in and they are deciding to utilize their extra cash to buy back the shares of their own stock. Why might they do this? Well, the company is doing well, they have extra cash on hand, and we know that cash over time is a depreciating asset because of inflation, so they want to utilize that cash. They could utilize that cash by investing in research development, they could utilize that cash by going ahead and buying another company, or if they're not seeing any great opportunities out there, they could choose to return that cash back to shareholders. And there's a couple of ways in which they might do that. One is by a traditional dividend, where they literally hand the cash out to all the shareholders on record. Another is through a buyback, where they actually take that extra cash, go into the marketplace, and buy back their own stock. Now, as a trader, I love when a company is initiating a stock buyback. Why? Because I am long this company, and there's no guarantee that the stock is definitely going to be going up. There could be supply out there, it could go down, but at least I can have the confidence to know that there's always going to be at least one buyer that's out there. It's the company itself sitting on the bid. And we know supply and demand is what drives markets. So if I'm looking at a company and that company has a certain amount of supply and demand in the marketplace, and all of a sudden that company itself is buying back their own stock, if the supply stays steady, then that stock is gonna rise in price. It also really helps with some financial wizardry. It helps to boost EPS. Why? Think about it. Earnings per share. If all of a sudden there's less shares outstanding, even if earnings stay the same, that EPS number is going to improve. It can also help to lower a stock's multiple. So again, for me as a trader, I love when a company is buying back its own stock. And you know who else does? Warren Buffett. Let's use an example from Warren Buffett's Berkshire Hathaway with their Apple holdings to highlight this. In mid-2018, Warren Buffett, Berkshire, they had now spent a few years accumulating an Apple position. And by that point in mid-2018, they actually owned about 5.2% of the company, 5.2% of the shares that were actually outstanding. Fast forward about a year and a half. In late 2020, Warren Buffett decided to sell $11 billion worth of Apple stock. Yet after that sale, Apple now owned 5.4% of the company. This example truly blows my mind, and it highlights the power of how buybacks work. So you're telling me that they sold stock, yet owned an even larger percentage of the company than they originally bought? That is totally insane, and it is all because Apple has taken their extra cash, they've been a cash flowing machine, and decided to implement huge buybacks over time. And that's the result. Buybacks, supply and demand, they reduce the outstanding supply. If demand stays equal, the stock should move higher. Give me a subscribe, give me a like. I'm cold, I'm going into trade. See you later.